What direction is the forex market taking at the moment? Is further consolidation a given in your view?
The market has been consolidating for the last few years. It will probably continue to do so for the next probably 6 months to a year as well. We've seen some major players flexing their financial muscle by making some acquisitions. Some of these have been due to regulation tightening, and some have been actually strategic acquisitions. But we envisage that there will be more consolidation in the industry, which is good for the industry.
You've touched on regulation, and of course the regulatory background is having an impact on forex. What have been the key developments there?
I mean, the most notable changes of regulation, or tightening of regulation, if you like, have come from the US, where they've been, the CFTC has tightened the rules there, higher minimum capital requirements, and also some processes and procedures, as well as trading and operations standards have had to be tightened. The other major one is Switzerland, where the law has changed for any broker that wished to offer foreign exchange services had to obtain a banking license. Those have been the two major sort of tightening of regulations that have taken place in recent times.
Investors have gone for the luster of gold recently. What's your take on that?
I mean, gold has been in the news recently. It's risen 27% this year. It's touched close to $1,575 an ounce. The demand is obviously a factor. The World Gold Council estimates that China will become the #1 importer of gold in 2011, replacing India. There is also the Middle East situation, the Libyan situation, the downgrade of the outlook on the US economy by the S&P. As the dollar falls, the relationship between the dollar and gold has always been an inverse one, so we expect gold to rise on that. There is also the European sovereign debt situation, is forcing investors away from the once safe government bonds into the ultimate currency of precious metals. So there are many factors behind the rise in the price of gold, and we at Hantec expect that this will continue.
In a very competitive market, what is the approach that Hantec Markets is taking to winning and retaining clients?
I mean, our sort of company culture at Hantec Markets is trust through transparency. What we promise our clients is that they will receive an uninterrupted trading experience. We offer them the most powerful trading platforms, quality execution, and of course this is all backed up by a first-class customer service.
Of course, technology is key in forex, so what's the best approach? Buying white label technology off the shelf or building your own?
I mean, you can argue there are arguments for both sides. The choice that we have made at Hantec is we've opted for the white label solution. We've done our analysis, and the cost of actually building your own technology, as well as hiring the right expertise to support this technology, just wasn't worth the investment for us. It's too costly, and again, there's also the risk of it being accepted. You're bringing something new into the market. So we've opted for the white label solution.
Let's finish with a heads up on emerging markets. What should investors be looking out for?
The obvious one is probably the Chinese yuan. Although it's a restricted currency at present, there have been some major banks offering options on the Chinese yuan as a first step, if you like, before the market eventually opens up. Our technical analysis team is keeping an eye on the Swiss franc cross against the yen. Obviously, you keep an eye on the commodity currencies, the Canadian dollar, the Australian dollar, New Zealand dollar, and of course, you can't take your eye off gold.
Hayel Abu Hamdan, thank you very much.
Thank you.